Welcome to Ben Talks Money. Here we discuss stocks, investments, ETFs, and personal finance.
A lot of us has been waiting for a dip in this market so that we can start a position. And Friday, we had a huge dip in the stock market after Trump's social media posts with China and also imposing additional 100% tariff on everything coming from China. And finally, it looks like we have a dip in the market. But is it time to buy the dip? The dip that we are waiting for is here, but is it time to buy? Hi, welcome back to Ben Talks Money. My name is Ben. I have an MBA in Finance and Management. I've been trading for 8 years and I'm a full-time options trader. In this video, I will discuss with you 3 reasons why it's not time to buy the dip in the stock market and why you should wait a little bit more. So if you are new here, I will implore you to please subscribe to the channel, like the video, share, tell a friend to tell a friend, and humbly, please help me grow the channel. So we finally got a dip in the market. And if you are like many of us who have been waiting for an opportunity to start a new position or something of that sort, you will be happy to see this dip in the market. But it's not every dip that needs to be bought. And here are the reason why you don't have to buy the dip in the market right now. First of all, this market has been going up for over 6 months. On Friday, the S&P 500 and the Nasdaq made their 20th all-time high this year. And buying the dip on the first drop is not prudent. The reason being that this might be just the beginning of a correction. And a market correction is usually about 10%, 10-15%. And the Nasdaq dropped about 2.5-3% on Friday. So buying it here is a little bit risky. It's like catching a falling knife. So you need to wait a little bit more. Buying it at this level is not prudent. And again, this is not financial advice. This is just for educational purposes. Do your own research, make your own decisions for yourself based on what is best for you. The second reason why it's not good to buy the dip right now is that this story is going to trigger a lot of things. First of all, it's going to cause inflation to go up drastically because putting 100% tariff on everything coming from China, and we know almost everything comes from China, means that everything that we buy is going to go up, which means the inflation is going to go up. And when inflation goes up, the Fed might not decrease the interest rate as was expected by the end of the year. And it might actually give them an opportunity to raise the interest rate again if this becomes a long-term issue. So buying it here, you might be caught in the middle of, again, a falling knife. So wait a little bit more. The third reason is that the market is still so expensive. Even after this drop today, NVDA's market cap is 4.6 trillion, which is still very expensive. And all things being equal, it will be good to get in here. But the story, and again, it's not even just the tariffs. The fact that he has also imposed restrictions on the tech companies being able to sell software and microchips, semiconductors to China is a huge blow to companies like NVDA, AMD, and the likes, those semiconductor companies. So buying any of those companies at this point is not advisable. The final point is that when you buy here, you lock your money. When you buy at this point, your money is already in the market. And if the market drops more, you might not have the opportunity to invest more money in it. You might be discouraged. Imagine if you buy in a stock here, because this market can really drop. If we say we are going to correction, we saw just the tip of the iceberg on Friday. If we are going on a proper correction, this market will drop. Take 10% of NVIDIA, take 10% of Apple, take 10% of all the tech stocks and look at where they will be. And ask yourself if buying it here is good. It's definitely not. So what should I do? What should you watch out for. First of all, use Friday's drawdown as a yardstick going forward, right? So on Friday, the market dropped, the Dow dropped about 700 points. The Nasdaq dropped over 800 points. So use that as a yardstick going forward. What I mean is that look at how the market starts to drop from here. Is it going more than what it did on Friday? Is it going less than that? And when you pay close attention to it, you realize that it doesn't matter the veracity of the news. It doesn't matter how negative the news is. The market doesn't drop as much as it previously. That's when you have to know that. It helps you to know that the buyers, the sellers are being exhausted. That's one indicator that you can always use for your trades. When the market is drawing down and it looks like it's going down, but it doesn't go down that much, the opposite is also valid for when the market is going up. When the market is going up, I made a video a couple of days ago about signs to look for when the market is about to drop. And one of the signs is that the market is going up, but it doesn't go up as much as it used to be. The opposite is valid. The market is going down, but it doesn't go down as much as it used to be. It tells you that there is a reversal close by. So that is when you start building your position. So patience is key in this moment. Be patient. Don't throw your money away. Don't chase it. Let the news settle. And again, Trump was supposed to meet the Chinese president Xi in a couple of weeks. He said he's canceled the meeting. You know, tensions are really high right now. So you have to let the tension settle down. We will know by Monday the response from China. You know, that's also going to trigger the market, because imposing 100% tariff on China is not going to be happy with it. They are not going to be silent. They would like to retaliate in one way or the other. So let's see how the retaliation goes. So after both sides throw their tantrum and common sense starts to come in, then you see the market will be settling down. That will be when to buy. So even though this is a nice opportunity, don't get caught up in the moment. Be mindful of your money, your hard-earned money. Make prudent choices and make sure you are entering the trades at the right time that fits your own risk tolerance level. Okay, guys, so that's it for the video. If you have any question, leave in the comment section below. And again, if this video was helpful to you, please like, share, subscribe to the channel. And until next time, let's keep talking money.